a good afternoon. You're watching Closing Trades on ET now, and for now the market is holding on to 20,800 as far as Nifty is concerned. So gains of almost 600 points in 2 sessions itself, because on Friday we were somewhere around 20,200 levels. So quite a bit of gain in just a matter of couple of days. In fact, the gain has been much bigger for Bank Nifty, which was sub 45,000 mark just last week, and this week it's already past the level of 47,000. So almost 2,000 points is what we have seen within a week. Today as well, that stock is up almost 1%. Today, however, it's large caps which are much better than the mid caps, because the mid cap index is just around that flat line. The small cap index is in the red, but it's the large caps which are actually doing quite well. And in fact, banking names like ICICI Bank, Axis Bank, these are the stocks at all-time high levels. And in fact, ICICI Bank is comfortably in the 4-digit category now. Yes, it had hit that mark of 1,000 rupees back in July, but had retraced from that. Now it's sitting at all-time high levels and comfortably above the 1,000 mark on ICICI Bank. We're also watching out for what's happening up to Adani group of stocks. Adani Power, Adani Ports, these are the stocks which are sitting at all-time high levels. You also have Adani Green, Transmission Gas. They are up anywhere between 15 to 20%, so solid surge across the board. India VIX is also higher. It's up around 3 to 4%. Do remember, there's an important event lined up at the end of the week in terms of the RBI monetary policy, wherein the outcome will be there on 8th of December. So we'll watch out for that. And ahead of that, a bit of volatility is what we can expect.
But right now, there's no volatility at all in the equity markets. We're holding very steady, closing in on 20,900 now for the Nifty futures. Not quite at the high point of the day, but still very much in the green, about 88 points as we speak right now. Bunch of other names which are actually holding out in trade. The operational updates from both M&M Finance as well as IEX have been very strong. For M&M Finance, the disbursements have seen an uptick of 16% on a year-on-year basis. The collection efficiency as well, although that saw a little bit of a dip on a year-on-year basis, but I think that's why it's seeing a bit of a rub-off of red on M&M Finance. For IEX, the volumes have seen an uptick of 13%. That stock as well is lower by about 0.5%. The average clearing price, that's come off by about 13% or so. So that's another stock which is currently in focus, although the stock started off in the green in today's trade. Couple of block deals as well, and that really has been the nature of this market. So yesterday too, or rather today too, you had Hanasa Consumer, 2% equity changed hands, block deals in Sapphire Foods, Shriram Properties. That was a sizable one. Almost a 10% stake got changed hands on the indexes, and Shriram Properties, I think, is the one which is still sitting quite a bit of tear on that stock. That is holding up very, very smartly in trade, and Swan Energy as well saw a block deal. Bunch of other stocks which are in focus, and there's JSW Infra. They're looking to acquire a majority stake in PNP Port, a price consideration of about 700 crore rupees. That stock on decent volumes, almost 10 million shares traded, or above that actually, almost a 4.5% surge is what that stock is sitting on. But clearly the flavor of the day is large cap banks and then the Adani Group names. Even Ambuja ACC are holding up almost about 8% per piece, that is. So let me welcome on board Kunal, Naresh, find out where the market is going to go from here. Kunal, picture perfect?
Yeah, picture perfect market, and I think now we could be looking at 21,000 for the Nifty in the next, hopefully, couple of trading sessions. So, today's data on the index options is very encouraging, because I think right from the start, we've seen a very heavy kind of a put writing back at the 20,500 mark. So yesterday was more of a an initial move towards writing of the put options, but I think throughout the day, especially start of the day, we've seen the 20,500 strike being written aggressively. That indicates that traders are now looking at the index hitting the upper end of the psychological band, which could be 21,000 on the Nifty.
21,000 on the Nifty, but what could be those levels to track on the Bank Nifty? And look at the constituents: Axis Bank, ICICI Bank, Naresh, all firing up now.
So the structure is very clear. We've started seeing a breakout move across the board. So the leadership earlier was Axis Bank. Now we have ICICI Bank knocking at new all-time highs. You have SBI getting close to that 600, 625 mark, which has been a resistance for the last year and a half. So now only thing which is left is a structural breakout in HDFC and Kotak, which looks difficult as of now. But a test of 1650, 1700 is possible on HDFC Bank, a test of 1900 on Kotak Bank. And what we look out for is the fact that if we look at the Nifty 50, finally the index has crossed into a new all-time high on a dollar adjusted basis, which was made in 2021. So overall, structurally, this indicates whenever we've seen such a breakout on Nifty 50 USD, we continue to see better flows and say participation from FIIs over the next few months. So overall, structurally positive, dips remain a buy.
So those are some of the banking names that are actually holding up. In fact, if you look at the PSU banking space, that too is actually holding up. And if I have it right, it's one of the best performing sectors today. So, of course, energy on account of that big move on Adani Energy and green is higher. Metals on account of Adani Enterprises. And then PSU banking names, the likes of SBI, which is up 2.5%, Canara Bank, IOB, etc. as well. Actually, my colleague Somit has done some work in terms of how the valuation stacks up of all of these PSU entities, including the banking names, the power financiers and the others as well. Let's go across to him to get a sense as to which are those pockets within the PSU names which still have value on the table. Somit.
Well, before telling you the stocks that have still have value left on the table, let's give you an idea of how PSU has run up in 2023. Now, if you see the S&P PSU index, that is one of the top sectoral gainers in 2023. The index has gained close to 41% so far on a year-to-date basis, which is the highest gain that the index has seen since 2009. Now, the stocks that have run up the most are REC, PFC, a gain of more than 230% on a YTD basis. Then there is Ircon, ITI and Mazgaon Dog, which have gained anywhere between 155 to 193%. Only two stocks in the BSE PSU index out of the 55 stocks have managed to give a negative return, and that is SBI and Gujarat Gas. Gujarat Gas is down around 9% while SBI is down around 3.5%. On technical side, if you see the RSI of the BSE PSU index stands at close to 85, which is the highest in the last 3 years. And when you see the Nifty PSE index, the RSI yesterday was at 90, which was the highest that we have seen since 2014. Now, RSI over 70 is usually an overbought zone for stocks and indices also. Now, for in stock specific, if you see PFC, HAL, BHAL have an RSI of close to 86, while BPCL and NTPC have an RSI of close to 80 to 83. Now, lastly, coming into the stocks that are still trading below their historical average valuations, all among the 55 PSU stocks, nearly 11 of them are trading below their valuations, below their historical valuation. BPCL is one of them. The historical average valuation stands at close to 9 times, while the current 12-month forward valuation stands at close to 6.6 times. Then there is Container Corp, Gujarat Gas, HPCL, Indian Oil Corporation, all the oil marketing companies. In fact, ONGC is also another oil and gas stock which is trading below their historical valuations. And for LIC, in this matter, if you see, the 12-month forward P stands at close to 15.8, while the last 1 year average valuation, because we do not have a higher historical valuation for LIC, the last 1 year average valuation was close to 19.3. So that is also one stock that is currently trading below its historical valuation. So keep an eye out for this 11 PSUs which are currently trading below their historical valuations.
Okay, interesting analysis there on the PSU names where there could still be value on the table. And of course, the ones which are looking a little bit toppish right now. Naresh, just want you to flag off the two most frenzied ones, PFC, REC, year-to-date gains already of 230% on both. Wanted to understand whether it's time to take chips off the table, or do you see a meaningful move even from here onwards on both these names?
So essentially, my view has been wrong on this one. Say, I expected at 300 to 350 levels, it should take a pause. But the momentum has continued on PFC. So out here, at current levels, it cannot be a buy because the risk reward just goes off. Say, from the lows of November of 230, the stock has moved up to 380. So the risk reward is not there. So at current levels, one could either keep a trading stop loss at 340 or keep booking partial profits as the stock keeps going higher. But overall, highly overbought. But we've seen overbought does not mean a sharp correction, but we could get into a pause going forward sometime.
Point. Let's take a look at some of the price volume as well. ICICI Bank, as we are talking about, has hit an all-time high today. The volumes are almost 2x of the 20-day moving average that we have seen, and it's been advancing for third straight session. It's up almost 8% in the last 3 sessions itself. So that's the kind of momentum right now on ICICI Bank. The other one is from the Alcobev industry, and a lot of names from that space are actually doing well. Radico Khaitan has managed to hit an all-time high level today. It's trading above all its key DMA levels, and the volume is 7x that we have seen of 10-day average. Adani Green is logged in upper circuit, volume almost 9 times the 20-day average, has surged as much as 31% within 2 trading session itself. Kunal, what's your view on the Adani group of companies from the lows that we had seen earlier in the year? A lot of these stocks are, 100, 200, 300% higher, and ports and power, of course, are sitting at all-time high now.
Yeah, so I think there are two ways to look at it. Either the stocks recovering from their previous major lows for themselves, or when we look at the stocks, for example, Adani Ports, I think has confirmed a breakout for itself about the 900 plus mark. I think 925, 930 mark for Adani Ports was the previous breakout zone. So that's a more stronger and a formidable name. Adani Enterprise is still way off from its all-time high levels of I think 3,998 or 4,000 approximately. So I think that's another stock which I believe has shown good momentum on the short-term charts. But then I think it's now time for the two names, Adani Ports as well as Adani Power. I think these are the stocks which have predominantly managed to surpass their previous major highs as well as create new highs for themselves. So I think these are the two names which I would be keeping an eye on.
Okay, the Adani names flying high as they continue to do so. Let's just talk about some of the other movers. And since we're talking about the Adani names, there's of course Ambuja ACC as well in ship shape. In fact, not just Ambuja ACC, the larger cement pack as well of late has been doing well too. Naresh, any opportunities within cement?
So in terms of cement, majority of the stocks have broken out. If one is looking out for something, a fresh breakout is a Shri Cement, which gave a breakout 2 days back. So that's a stock which looks promising. And then maybe go towards a smaller name like JK Lakshmi, which is also trying to cross a 2-year high. So these are the two names which still have risk reward in favor, but the rest of the names like Ultratech, ACC, Ambuja have moved up sharply. So the risk reward is not great, but the momentum is still pretty strong. So at current levels, one could go with Shri Cements and JK Lakshmi.
Top recommendations coming in from the cement pack. Time now to slip into a very short break, but as we do that, listen in to what the best of the market voices have to say regarding the large caps and the small cap moves, and where should one place your portfolio.
Markets are expensive, there is no doubt about it, from a 12-month perspective. But there are investors who are willing to pay, let's say, take 3 or 4 year view, specifically even the foreign investors who are willing to take 3-4 year view. If I couple that with the certainty of growth in India, right? So market doesn't look that frothy or that expensive if I take a 3-4 year view. I feel that large caps will also do well here from here on, because if the money comes, which it will, even from the foreigner, given the sentiment and given the overall stability, then the first round of money will come in large cap.
While the small and mid caps in general and the broader markets have done phenomenally well over the last 6-9 months, I think the large caps in general have lagged. And so I think investors want to participate. It's time, in my view, that elephants will dance. So I think there is still an opportunity in the large caps. Not to say that there is no opportunity in the small to mid caps, but I think in a bull market, there's always sector and market cap rotation.
I think large caps will do well, because it is easy for new investors, particularly foreign investors, who are looking at India seriously, not only because India is doing well, but because they are getting bugged out of shape in China. The larger cap financials is the easiest to buy. They're also a large part of the index. So even if these guys underweight, overweight, they still have to put, if not 30% then 25%, but all that has to go into the same large cap names. And within those 3 groups, which is financials, consumer and IT, it is easiest to buy financials because they are doing well and the stock prices have not done well.
General fact that the retailers are making money across all segments. They're not limited only to equity. Gold is doing exceptionally well. Bitcoins are doing fine. Irrespective, housing is doing very well. So generally, there is wealth creation across sectors, which will generally cause greater interest in asset classes, of which equity will also be a part, because you could have a diversified portfolio. The next is the return of FIs, and I think that is going to be a big catalyst for the market. Many people make a statement that the retail is the only element in the market that matters. Retailers caused us to reach where we are. FIs will cause us to move ahead from where we are, because they will now, there's likely to be participation, particularly in the large cap names.
Back with closing trades right here in ET now. You've got the November JLR UK sales data coming in, and that's a meaningful uptick, at least on a year-on-year basis. We'll have to call out the month-on-month data as well. We've got Abhiram joining in on the show right now to talk about what he's making of the markets. Abhiram, hi, morning, good to have you in the show. And it almost seems like after the state election verdict, there's a re-rating of sorts for India. You think time now for the FIIs as well to make a comeback?
Thank you for having me. Well, I think FPIs have been quite active in the market, especially since March. I know we've had our ups and downs around those flows, but broadly they have been bullish on the country. And it kind of goes without saying that India also had the relative advantage compared to the other emerging markets, especially China. And it's fair to say that we got a disproportionate amount of flows from there. So overall, I think investors are still quite bullish on India going into next year. And the macro picture is quite benign, quite favorable, actually. The only thing that may be a little bit questionable here are the valuations. But aside from that, it's really hard to see a big picture negative around India at the moment.
You know, it just takes back to the start of this year or maybe end of last year, wherein we were talking about how 2023 is going to be a year of very moderate gains for the Indian markets. We were talking about maybe, 5 to 7% kind of gains. Looks like we'll be easily able to beat that, while of course on a global, relative basis, we are still underperformers. But what about 2024? What kind of return expectations should have from the Indian markets?
Well, I mean, as I mentioned to you, I think valuations are fair, probably a bit too fair at the moment, or maybe a little bit on the expensive side. So I think there's some dislocations in the market. If you see the year that's gone by, like you rightly mentioned, large caps have significantly underperformed. In fact, the headline indices, which are Nifty and the Sensex, have underperformed most global large indices. So therefore, I think that the recipe is quite right, brewing correctly for a large cap outperformance next year. And we see this year mid and small caps have outpaced the large cap indices by maybe 20-30% at least. What we are seeing today is kind of a relief rally ahead, you could say, in the past month or so. Having said that, I don't think that this is the end of it. What we'll most likely see is that investors, again, going into early next year, thinking that maybe the markets have run up a bit too much, and there's a possibility of maybe a modest or a small correction that will form the base for more kind of predictable returns through the next 1 year or so. So I think the recipe is for large cap outperformance next year. I think India will still continue to do well, but a lot depends on how data in China is, and if that starts to improve, maybe a question about performance or underperformance may come in. But as I said to you at the start, the stars are kind of still favorably aligned for India.
Yeah, and it looks like that. I mean, today only you got the commentary from S&P, wherein they're targeting India to become the third largest economy by 2030 itself, whereas Moody's has actually downgraded the outlook for China. But just coming back to the question, Abhiram, what I'm trying to get from you is the fact in 2024, should one expect, 5 to 10% kind of gains for the Indian markets? Could it be higher? And I'm talking at the index level, of course.
Well, at the index level, I do think that high single-digit returns to low double-digit is a reasonable expectation. It's usually the long-term earnings growth for India. And if valuations hold up where they are, I suspect that's the kind of return we will get next year. But I'm actually more concerned about whether we will have the repeat of the mid and small cap outperformance, which I doubt will happen next year.
Okay, quite a few points really to probe about, upon over there. But let's talk about the large cap outperformance which you're betting on, Abhiram. Where within large caps do you find value on the table? I mean, to my mind, it really comes and boils down to those few odd large cap banks which have been underperformers, and then when IT perhaps, which no one rightfully so wants to look at right now. Or you think it's going to be a more across the board, broader kind of move within large caps?
I think you kind of mentioned the two things I was going to say earlier. So large cap banks is our preferred area. Obviously, it's a significant part of the index as well. And if we think that the index as a whole will return, let's say, 10% or a little north of that next year, then it's unlikely to happen without large cap bank participation. I think you're starting to see that a little bit now. So large private banks is number one area. Now, add a little bit to that would be selectively on insurance. On IT services, at least most of our interactions with investors or companies are suggesting a second half calendar year recovery. So I suspect investors will position for that maybe around March, April or so. So I think IT services is a sector everyone's very carefully looking at, even if they may not be actually buying it right now. And the third area that I think that will be quite positive next year is the overall industrial space. And I know within the large cap space, there are only a handful of names, but I think those are the ones that investors will focus on, especially around elections, and especially if there is a stability around the budget and the politics and so on and so forth. That will remain a longer term 3 to 5 year theme, but I think investors will look at that quite a bit. So just to round that off, large cap banks, IT services and industrials are the three areas that we are focused on.
And now let's talk about the other pocket which you're wary of right now, small and mid caps. Again, across the board, you think, they're going to come down, or within pockets where you think there is now over ownership and exuberance perhaps?
Well, I agree with the latter statement, which is that there's over exuberance in some names. And see, one of the good things that's happened in India is a lot of good quality companies have come to the market in the past, let's say 3 to 4 years. And they've proven time and again that their earnings and the quality of the business model is quite strong. So it would be kind of not right to say that there will be an across the board correction. I doubt that will happen. In fact, I don't even know if there will actually be a proper correction. What I do think will be that those indices may take a bit of a break, but good quality companies that have been delivering on results, whether they are large, mid or small, I think will continue to do well.
Right, interesting. The other thing I also wanted to chat about was, since we are on the subject of those frothy pockets within the mid and small caps, is it the obvious ones, your defense, power PSUs perhaps, railways to some extent, although they have already come off from the year highs, or do you think it's going to go deeper than that?
Well, actually, if you look at the spaces that you mentioned, we actually still like many of those areas. For example, railway capex is probably one of the most positive areas today in the market still. At least the fundamentals are still extremely favorable. The other one that you mentioned, defense, and again, an area that we still think has got room to run. So I guess what may happen on the other hand is what we saw in the last 6 months or so is that the rising tide kind of lifted all boats, and where there isn't sufficient justification for that outside of these areas, or where there's not a fundamental backing, I suspect those stocks will probably tail off or maybe even correct a little bit.
Okay, just looking at what else is actually holding out in the markets, and Abhiram, have to talk about the performers as well. Not negating the last 2-day moves, but the Adani group of names, penny stock, and that's been holding out well. Not just that, you've had a stupendous run in real estate, in the entire auto theme as well. You think these are themes to hold for the long haul?
For the long haul, yes. But when you speak about autos, I think that what we've had, good numbers have come off a low base compared to last year, and we also saw buyers delay their purchases this year because it looked almost as if, especially in two-wheelers, for the first 6 to 7 months of the year, there was not really much demand, and a lot of that got bunched up within the holiday period or the festive period. So I suspect some of that will tail off. And so if we were to look at the economy and the way purchases are happening, a lot of it is still very K-shaped. So therefore, the affluent India theme is still playing out, and the affluent are actually spending, and their basket of goods actually includes four-wheelers rather than two-wheelers. So I think what may happen is, going forward, investors will start to look much more at four-wheelers, where the story from a long-term perspective is a lot more justifiable. So within autos, we have a clear preference for four-wheelers over two-wheelers, and especially across the consumption basket, actually more for luxury rather than mass consumption.
It's affluent India which seems to be buying right now, and that's the theme Abhiram suggests to play right now. So thanks Abhiram for making time and speaking with us. Appreciate you joining us on ET Now today. But time now to shift focus and take a look at what's happening in the agro commodities as well. Seems like the demand and prices for millets in the markets are on the rise. Let's go across to my colleague Vinny to understand the dynamics which are at play in this particular space. Hi Vinny.
So absolutely, we've seen millet prices that have been at a record high levels, whether you see a jawar, bajra, ragi and other types of millets have increased in the range between 40 to 100%, and this is over the last 1 year, and this is according to some reports that we've seen, as well as the pricing as well. Look at the jawar prices as well. In the last couple of years, a sharp increase that we've seen. Last December 2022, jawar prices were somewhere around the 38 rupees per mark per kg, while as of now in December 2023, it's at around 60 rupees per kg as well. So a sharp increase in terms of the prices. Similarly, the trend is for bajra as well as in terms of ragi price as well have seen an increase over the last couple of years. Now, the main reason that we're seeing an increase coming in, it is the International Year for Millets in this year that we announced in India as well. And, because of that, we've seen a lot of FMCG companies entering into this millet space. They've launched a lot of new products. Millets are now even a part of the breakfast cereal pack as well. And a lot of new launches that have come in, which is leading to an excess in terms of the demand that is required for these millets as well. So when you look at it, there's an increase in demand for the millets. Other than that, there's a launch of a lot of new products by these FMCG companies. So the need for these products has increased as well. You look at a pasta, noodles, snacks, everything that you get in a millet form as well, which is leading to an increase in terms of demand. Other than that, there's an adverse bad weather, which impacted some of the areas which are producing millets as well. So when you look at it, there was drought in Maharashtra, Karnataka and Telangana this time around in those areas which were in jawar. Other than that, the brown crop areas also such as Andhra Pradesh, Karnataka and Kerala saw excess rainfall. So because of that, the crop was also not up to the mark. The production was not also as much as required. Plus the demand now that has increased, the production is not enough to subsidize that excess demand as well. Now that is something to watch out for. But as of now, when you compare the weightage in terms of the WPI for the millets, that's very, very small in terms of the percent that it comes in versus overall the WPI data. So in terms of inflation, analysts say that there could not be much of an impact in terms of inflation or move the inflation higher because of millet prices going higher. So not a worry coming in on that front as well. But let's keep an eye out on these millet prices.
While it's 20,850, close to the day's highest point as far as Nifty is concerned. Even Bank Nifty is doing okay. It's fair to mention some of the losers as well in the trading session. So Cyient is down about 6%. Honasa Consumer is also coming under pressure, down 6%. There was a large block deal that happened on Honasa as well as Gokuldas Export. And on account of that, both of these stocks are running under pressure. And then, of course, you have Mrs. Bector's ICICI Pru Life as some of the other names which are seeing a bit of a cut in the trading session. We have Sudeep Bandyopadhyay joining us on the show as well. Sudeep, I wanted to begin by discussing Honasa Consumer. The stock had suddenly gone from levels of 330 thereabouts to 420, 430 plus, and now again it's been retracing on account of the supply pressure coming in. How should a retail investor look at this entire space right now?
Well, I think, Honasa specifically, I would say that, there was a bit of an euphoria when the prices started going up. There was a brokerage report which pegged the price at a much higher level, and I think that started the excitement in the counter post listing, and there was a lot of buying in that counter. But as far as the fundamentals are concerned, I would say that they're yet to prove their strength on non-Mama Earth products, and that's where I think the report also was talking about the game-changing growth as far as the non-Mama Earth products are concerned. And of course they're talking about retail, online, non-online channels and things like that. But I think all these are in the future and all these are not proven yet. So under the circumstances, I will refrain from advising people to buy into Honasa Consumer. Of course, today's fall is on the back of supply pressure. And for a new listing, these kind of pressures once in a while do come when the lock-in periods keep getting over for multiple classes of shareholders.
Right. But, aside of that, Sudeep, looking at the kind of IPO subscriptions that we've seen off late for a series of IPOs, do you think the FOMO feeling is most evident there?
Of course, Aisha, there is a FOMO feeling. When you apply for an IPO which gets subscribed 30, 40 times, and you end of the day you don't get any allotment, and there is a lot of memes going around which is talking about this phenomena. And of course, there is a FOMO feeling, and people do apply. And beyond that, I would say some of these IPOs are excellent companies with great potential for the long term, and they do deserve some of the valuation and much better compared to what value they came in the market at. And we are seeing that getting displayed in the market post listing. So fundamentally, there is no problem in more IPOs coming. And fundamentally, I would say it's very good for Indian market. It increases the depth of the market by increasing the number of good quality stocks which are in the listed universe. The choice becomes much larger. Some of the interesting companies are also coming, which probably were not, companies from those sectors were not there in the market earlier. And I would say this is a very healthy trend. Now, also I must say that there is enough and more liquidity in the market, both domestic as well as international. So if good quality stocks, companies come for an IPO at a right price, I think there will be enough and more subscribers.
Case in point being Tata Technologies, yes, that euphoria 1400 has settled down. Let's pull up the 5-day, 10-day chart, whatever is available of Tata Technologies, to see how the stock performance has been, because it's listed around that 1300 rupees, went all the way to 1400. Then it saw a bit of a dip. Today it was trading just around that 1200 rupee mark. So it's been a bit of a turbulent time for that one as well. But still, at least from the issue price, it's been a massive, massive upgrade that we have seen, because the issue price was around 500 rupees. But in the meantime, I also wanted to put the spotlight on New India Assurance, because that stock has been on fire. Within 1 month itself, that stock is high around 70%. What exactly is the game plan that the management has set for themselves, and is there a reason for seeing this kind of surge in the stock price? Let's listen in to a conversation my colleague Anurag had with the management of New India Assurance.
Overall, we are aiming at reducing the ICR by the end of the this financial year, and a reduction in the combined ratio. The target is to reduce it by about 5 basis points compared to last year, and we are taking steps in this direction by not just price correction in various like motor and health, but we are also doing a lot more work in claims control and improving our claim settlement, fraud control, and various other aspects which will help in the claims to perform better by the end of this financial year.
Ma'am, in Q2 you have taken a hike in your retail health product. So what is the quantum of that hike? Because we have heard that that hike is after the 6 year, the gap of 6 years. So what is the quantum, and it will continue in coming years also?
See, earlier there was a guideline. It was not a directive, but there was a guideline from the regulator that the price increase in health should, in retail, should be every not more than once every 3 years. So we did intend to increase the price in 2020, but at that time there was the impact of COVID and the pandemic, and we didn't want to add to the the financial strain on the general public by increasing the health premiums. So that is why in that particular year it didn't happen, the price increase, and then subsequently we have now done the increase in 23. And the price increase is ranging between 20 to 30%. Average would be about 25 to 26%. Of course, depending upon the age groups and where the claims ratio has been more adverse. We do not see this the price increase in this range likely to happen in the future years, because price increase basically has to reflect on the has to take care of the inflationary trends, and we do find the medical inflation is much higher than the general inflation. So what we are seeing, what we are trying to do is to reduce the impact on the public. Going forward, we would expect that this increase would be marginal every year.
Okay, but the question is, should one look at buying the dip that we are seeing today in New India Assurance? Naresh, what's your view after that massive 60-70% rally? There's a bit of a breather today. Should one use this opportunity to buy, or it's time to book profits only?
So not really a time to actually get in so early, but one has to be looking at it and to be bought in parts. Say after a move from 140 odd levels to 250, if the dip comes, it should be ideally 15-20% from the top. So if the top was 260, you want to get in at 200, 220. So at current levels, the risk reward is not great. So one could continue to hold on to the position. We would expect some bit of a pause between 220 to 260 levels, but closer to 220 is where you want to buy into the stock.
Okay, that's the take coming in on New India Assurance. Currently, the stock is seeing first signs of a correction after quite a stupendous move. 4.5% lower is where the stock is currently as we speak. Few losers there as well. M&M Finance, like we said, the monthly numbers didn't quite match up to the street expectations. India Cement too, although it's had a very, very choppy ride, and it's not like the stock started off in the negative, but that's where you're seeing some red ticks now build in. Persistent as well, which is down about 2.6%. And then PVR Inox also, which is down about 2.5%. Within the large caps, look at L&T as well. The stock in the last 2 days has been powering ahead, but that's not quite the, move on L&T right now, because it's flattened out once again. So saw a dip, and that dip again is getting, covered into. There's, of course, the technology pack, which is definitely taking a bit of a backseat today. There's Unilever also, which is currently down. There's IndusInd Bank, which is down about 0.5%. And Bharti also, which is lying flat as we speak right now. As is ITC, by the way. That's also down nearly about 0.5% as we speak right now. But Kunal, just on a couple of these laggard charts, I mean, the likes of both ITC as well as L&T, which has been very volatile today.
Yeah, but I think both of these stocks have done reasonably well at the start of this year. So I think ITC also went through a phase from 490, 495, and I think the news had actually come out for ITC. It was in the month of August, if I'm not wrong. And from there, the stock has gone through 3-4 months of consolidation, coming back towards, I think, 430 or 427. That was the low for ITC. So I think it's gone through a time-wise, it's gone through a price-wise consolidation. And I think closer to 450 mark or slightly lower than that, I think is a good level to enter ITC. L&T, in fact, has been an absolutely strong, larger cap stock. And I think that's one of the spaces which has consistently done exceptionally well throughout this year, from 2,500, 700 towards breaking past about 3,000 and now 3,300 for L&T. I think all of those levels have been surpassed time and again for the stock price. So, these mild corrective phases, small dips into these stocks should be taken as good buying opportunities.
Okay. Should be a good buying opportunities. But let's also take a look at some of the other big buzzers. And in the last 2 minutes, there's a bit of a perk up on India Cements. We were just highlighting how rest of the cement pack is actually participating. So ACC Ambuja can, of course, be attributed to the group move as well on account of the Adani group. But take a look at JK Lakshmi Cement as well. That's also trending high. So a lot of these buzzers from the cement pack. Sudeep, what's your view on building materials and cement?
Well, extremely positive. In fact, the way the infra spending is happening, the way the infrastructure spending is expected to happen, both private construction as well as public construction is increasing. Also, the housing, is an area of focus. We know real estate has been doing very well, both commercial and retail. So, under the circumstances, the demand for cement as well as building materials is definitely going to keep going up. And efficient companies in this space will definitely benefit. So from a cement perspective, Ultratech has been a favorite for a long time, and I continue to maintain my view. The Kesoram, the cement business acquisition again is a definite positive for Ultratech. There are other cement companies also, in the mid cap and small cap universe, which are A, doing well, and B, can be target of some corporate action, which can lead to unlocking of value from a shareholder's perspective. Other building materials also, whether it's a ply, whether it's a sanitary ware, whether it's wires and cables, whether it's pipes. I think all these are sectors and areas where one should look at for the next 2-3 year kind of a horizon.
But Sudeep, at the same time, given the kind of market move that one is currently seeing, given how solid the year has turned out for mid and small caps, anywhere you think at least taking partial profits off the table would be sensible?
Well, as far as mid cap and small cap is concerned, the only area where partial profit taking, to my mind, can be looked at is in the mid cap IT companies. I think there was a significant rally in mid-cap IT, some bit of correction we are seeing now, and some more correction can be seen going forward. So there one can look at booking some profit. The other space where I think some amount of profit booking is par for the course is defense. Yes, it's a great sector. It will do well. Government's focus is on defense, make in India. But I think, we have front-ended the entire rally. Whether it's a Mazgaon dock, whether it's a HAL, whether it's a BHEL, I think we have seen a massive rally. Now, these companies will definitely do well, but will the share price keep up, or we'll see a time-wise correction? To my mind, I think we'll get to see a time-wise correction, and some amount of profit booking is par for the course. And I think what you are alluding to is absolutely right. FII's money will come in a big way, and their focus will be large cap, where there are still relatively attractive value proposition.
Okay, point taken. Pull up some of the other charts as well. Take a look at Jio Financial Services. That stock has inched higher by almost 5%. You also have a CESC from the entire RP Sanjeev Goenka group. Has been doing quite well. It's 8% higher as we speak, 118 on CESC, and then of course JK Paper is the other one, which is up around 7%. In fact, the entire paper basket is doing quite well for itself. Let's go across to Sharat to get a sense as to what the chatter is around some of these paper stocks in the dealing rooms today. Sharat?
Yes, from what we are gathering from the dealers is that there is a sustained buying happening in the cash counters of paper stocks, especially strong volume coming in for say Shai Paper, West Coast as well as JK Paper. Now dealers have stated that the DIs as well as certain HNI categories have become active in these counters, and as per our channel checks, paper industry has taken a price hike for the month of December. Now this price hikes, they range between 3 to 5% on a month-on-month basis across paper as well as the pulp categories. Importantly, a strong demand trend was seen in the packaging segment in the festive season, and also it's continuing in for the wedding season as well. Now do remember, December is the month where the renegotiations happen for the quarters as well as for the year when it comes to the paper segment, and importantly the second half of the financial year is important, and also for strong numbers coming in for the paper segment, especially the demand coming in from office as well as the new school term when it starts for the books as well.
Okay, that's the buzz coming in on the entire paper segment. But talk about Qs this week, and you'll have the RBI monetary policy outcome as well. Sudeep, how critical would that be, or is it a pause you think that would make the street happy right now?
I think the pause will make the street happy. To expect a rate cut, I think will be unrealistic. RBI will prefer to wait and watch. The remnants of food inflation is still there, and I'm pretty confident that RBI will prefer to wait and watch. The policy, they may announce a little more benign stance, and that should enthuse the market. Actual cut, I think we'll have to wait. I think the same pretty much will be there as far as US Fed is concerned. They also will wait and watch. Somewhere the stance will start changing towards a more benign outlook.
Benign outlook, at least the commentary will be interesting, because as you pointed out, now the discussion is when the rate cuts will begin. Most likely post the election next year, or could it be even before that? That is something to watch out for. But other than that, and the fact that, of course, the RBI meeting will start tomorrow, what are the other things to watch out for in terms of the cues that are lined up for us? Let's take a look at some of those as well. Well, the US trade data will also be out, so we'll watch out for that. Bank of England will come out with its stability report, so that will also be important. And then retail sales in the Eurozone area, and some crude oil inventory data is what we'll get from US. Back home, the lock-in period ends for Star Health, so take a look at the supply pressure that might emerge from that. And then SCPC, the right issue might open. Paytm, there's an analyst meet tomorrow wherein they're going to discuss the loan distribution business. So that will also be critical. And Hindustan Zinc, which has become a large, dividend play. The meeting is tomorrow to discuss the dividend. So that will be important. And Patanjali has its analyst meeting later today at 4:30 p.m. So we'll get the data points to discuss on that one as well. But separately, in terms of the technical indicators of the market, looks like we are at the day's highest point. It's fresh highs, of course, for the markets, 20,854. So what should one do for tomorrow? That's the big question. Naresh, a view for index and, of course, the BTST ideas.
So on the index, it continues to remain a hold. We are seeing good momentum any dip is being bought into. So in terms of stock specific ideas, would go a little contrarian in terms of ideas. First is the bond Maruti, which is yet to break out very close to the highs of 52-week highs and all-time highs. Could see a follow-up move. Stop loss at 10,600. Target price of 11,000. Second is a bond Coromandel International, which has given a breakout today. Stop loss at 1190. Target price of 1240.
Kunal, what about you? What are the BDSC trades?
So buy calls on Aarti Industries. That's a stock which I would suggest as a buy. A fresh breakout about 560, 565 marks. So targets of 600. Stop loss at 550. And NHPC is the other name which is also heading towards a breakout above 57 mark. So buy with a target of 64. Stop loss at 56.
Okay, those are some BTST trades coming your way. Counting down, of course, to the close. And one must also point out that not just the Nifty spot is currently at well above that 20,800 mark. Look at the futures. We're already closing in on 20,950. So seems like just one more push and we should make it to that 21K mark, hopefully this week itself. That's the Nifty futures currently in trade for you. It's really all about the Adani names. They are the ones which are really the top contributors, at least within the F&O universe. Adani Enterprises, a 16% gain. Adani Ports up 14.5%. ACC up nearly 8%. Ambuja Cement up almost 7.5% or so. Power Grid as well has been holding out very, very strong in today's trading session. So that stock too is looking very, very smart indeed. There's NTPC, which has scaled up another 4% in trade. ICICI Bank, of course, has looked very smart. SBI, M&M, Maruti. These are all, the ones which have provided some strength in the market today, as has been the case with HDFC Bank and Axis too. They too have held out. And guess what? Even Reliance participated. Not too much of an up move, but a 0.5% uptick regardless for RIL2. 2438 is where that stock is currently closing in. But Sudeep, just wanted to understand whether there are any contra bets still in the market other than IT, of course. Is it time now to perhaps bet big on an inversion of the K-shaped recovery that we saw play out ever since COVID? Would you now bet on, say, some of the rural recovery themes, betting on a recovery coming in anytime soon, maybe triggered by election spends?
A couple of areas, Aisha, which we're looking carefully at. For an aggressive investor, I think these will be the pockets to look at. One is specialty chemicals. It has been, down in the dumps for pretty long, and quarter on quarter they have disappointed the market. There has been enough obituaries written of specialty chemicals, but I believe that I think time is coming now to start looking at, because some of these are now really showing value. One can look at SRF, one can look at some of the other chemical companies. Even UPL from a long-term perspective can be looked at current levels. But remember, these are 1-2 year bet, not immediate. The other space which you alluded to is FMCG. Yes, rural consumption revival will probably be critical from a political point of view, also pre-election. And I do expect rural demand revival. So under the circumstances, FMCG companies which have a majority of their income coming from rural India, like an HUL or a Dabur, definitely can be looked at.
A lot of these power ancillaries are still doing quite well. NTPC, record high level. NHPC, record high level. Power Grid right up there, CSC again record high level, and even the utilities and the ancillaries, the likes of ABB, are sitting at life high levels. Kunal, your view?
So I think CSC is something which highlighted in the morning as a mid-cap trade that looks very attractive at current levels. So the stock stagnated at 102.3 mark I think for last week, and it went down to 95, 96 odd levels if I'm not wrong, and from there. The second breakout, that 103 mark, has led into a very strong pickup of up move for CSC. I would still believe looks attractive at current levels and would look out for higher targets close to 130, 134 range now for CSC, which means potentially another 15% broadly as a near-term return for the stock. NTPC on the other hand also I think is looking attractive now, but of course the beta nature of the stock is significantly lower. But we've seen the stock going into a much more stronger breakout, break past above a downward sloping trend line on a yearly chart or on a quarterly chart basis, and I think the momentum has been quite consistent for NTPC as well. So minor dips, the stock keeps on giving those opportunities of 4 to 5% kind of an odd correction. That should be a very good zone to try and buy NTPC.
Naresh, this dip on Prestige and Phoenix Limited, should one look at buying these dips as well?
I would say one should be looking at booking profits in a lot of these real estate names, which have gone up 50 to 100%. in the last 2 months. So Prestige has gone up from 550, 600 all the way to 1100. So time to book profits, or if one has a very longer term view, hold on to it, not a buy at current levels at all.
Okay, that's the take coming in on, Phoenix Mills. That's been holding up very well, and Prestige Estates as well, which has seen a 67% uptick in just the last quarter. But Sudeep, we'll let you go on that note. Thanks as always for taking the time out and joining in. Let's begin wrapping up for the day. Closing in at the session highs pretty much, and now counting down to 21K on the index. 20,900 plus is where we've shut shop for the futures at least. The broader markets, of course, have done very well today too. So you're closing in with a positive market breadth for yourself. It's been quite a move for the broader markets, not as much for the small cap index maybe. But then again, there are names from the Adani Group which have held out very smartly. Double-digit gains for both Adani Enterprises as well as Adani Ports. ACC Ambuja have looked very good. Power Grid, NTPC and the big banks, ICICI Bank, SBI, have pushed up ahead. Can't say the same today about HDFC Bank or for that matter Kotak. They were a bit of a laggard or relative underperformers as opposed to what an ICICI Bank and SBI have been doing. At the same point, you did have your fair share of losers too today. So Bharti, after making it to that 4-digit mark, that was a little bit soft. L&T was absolutely flat in. ITC was down about 0.4%. And the entire technology pack, that also did not do all that well. So everything from an HCL to an LTIM, Infosys, Wipro, they were all laggards. As was the case, by the way, with the Bajaj Finance too. That too was lower. ONGC, that also saw some softness coming in. But with that, we'll wind it up right here on this edition of Closing Trades.
In consumer